as regards the hardware journey, I think we have started on that journey, but it's a long journey. It will not be, Rome was not built in a day. So India has just entered the tech supply chain. I think India has done well in the last 10-year journey, right? In the sense, most mobile phones were imported into India. Today, I think 90% plus are assembled in India, and we are also exporting a fair number of phones outside India. And we are keep on going down the value chain, right? Getting into camera modules, casings, and others. And we will do that with other sectors, right? So in that sense, we are on the right path, but we need to keep at it. It's a decade, century-long journey. It's not a one-year thing, and you can't click it, and it's not Perplexity AI that will give you the answer 30 seconds later.
This is Allocating to India, conversation for foreign investors thinking about the world's fastest growing large economy, with the allocators and fund managers actually putting capital to work. Views expressed are the speaker's own and informational only, not investment advice. Full disclaimer in the show notes. Our guest today is Vikas Chiranewal, portfolio manager at Franklin Templeton Emerging Markets in Singapore. Vikas has spent nearly 2 decades at Franklin Templeton, investing across emerging markets, with a particular focus on Asian and EM smaller companies, a corner of the market where India is often at its most active and least understood by foreign capital. That long tenure means he has watched Indian markets through almost every cycle of the last 20 years, from one of the longest running EM platforms in the business, and also in India. We talk about how a global allocator should actually frame India today, why the most interesting opportunities often sit below the large cap index, the nuances foreign capital systematically misses, and what 2 decades in the same seat has taught him about what changes and what doesn't. Here is our conversation with Vikas Chiranewal. Because how has been your journey from I am Lucknow to the current role at Franklin Templeton?
Hi guys. Glad to be here. Nice to see you, Saurabh, Nitin. Uh, and thanks for inviting me to the show. Yeah, it's been an eventful journey. Has changed quite a bit over the last 20 plus years. I recently celebrated my 20th year at Templeton. We were fairly young professionals when we entered the industry. I had brief stints at sell side with Morgan Stanley back in the day, covering US research. Prior to that, I'd spent a year at McKinsey as an analyst before doing my MBA with you guys. So that gave me some grounding of how to deal with numbers, how to look at global markets. But the real investing stint came when Mobius hired me back in 2006. Fairly fortunate to get into the team, which is well regarded, which is very global oriented from day one, in the sense, even in my first year at Templeton, I was also doing other markets apart from India. Uh, Fairly early on in the career, I got pulled into a project called Small Cap by Mobius. We were just starting that franchise out in 2006. So some of the younger guys like me were pulled into the project by Mark, saying, guys, why don't you look at this baby and let's see if we can do some business out of it. So we started from scratch, literally, this platform on small cap, uh, alongside doing other things. In the sense, I was a core part of the India team for EM. So started researching India when I first joined in. uh, some satellite countries like Sri Lanka, Pakistan, Philippines also came into the bucket. Pakistan was very interesting for an Indian to cover, for sure. But then this journey of small cap started gaining legs at our end. We gathered some assets. We were able to deliver performance, and then that's the journey I've been on for the last 20 odd years. Over a period of time, we dropped the formal analyst hat, right? So I don't write research. on India, Pakistan, Sri Lanka, Philippines, and other markets. And for the last 10 years, have been a PM only. But I always tell my clients and even my team, I'm a full-time analyst and a part-time PM. I think core for small caps and for companies to do well, you need to be very analytical at a company level, right? Most of our decisions are at a company level. We don't buy countries, we buy companies within countries, right? So the analyst hat never goes away, right? One of the key joys of this job has been, the interactions. Uh, Today, I do closer to 250, 300 company interactions a year, and I've been at that pace for the last many, many years. And that's the great joy, right? In the sense you get to meet very capable people who are much more capable than you and learn from their insights and their journeys. So yeah, it's been quite wonderful being here at this seat, and very grateful for it to Dr. Mobius to give me that chance when he gave me that chance.
You've worked in the same seat from inside India, Mumbai, and now Singapore, where you're
Yeah,
outside. Has there
yeah.
been a change in your perspective because of change in location?
Perspective, I would not say perspective has changed dramatically. I've been 7 years into Singapore because travel and seeing different things and being forced to see different things was ingrained very early on in the team, right? Asking an Indian analyst to cover Pakistan in 2007 when Musharraf was in power uh, does make you flexible. Let's put it this way. It does not. You cannot be a very close-minded person if you are forced to look at those perspectives. So yeah, in that sense, perspectives have been open, and that's a gift that I would credit Dr. Mobius to giving that gift to a lot of us. He has made us very open-minded. We were very curious to begin with in life, but he has made us a lot more open-minded.
Uh, Vikas, that's a good point you made. That perspective was always open-minded from the start, where when even when you were based in India. And given that, I think you would also have been interacting with a lot of foreign capital allocators, foreign investors, foreign PMs. Uh, uh, from the seat of Franklin Templeton or in Singapore, how should in your view, how should a sophisticated foreign allocator should view India? How has your weight of India moved over a period of time versus vis-a-vis in the EM small cap bucket or a Asian small cap bucket?
Sure, sure. So let me answer your second question first because that's an easy, straightforward answer. When I started investing in '06, '07, '08, that vintage, India's weight was between the 4 to 6% handle. And a lot of other markets that are no longer that big, Brazil, Turkey, South Africa, Russia, had similar or higher weights than India. If you come back to now, the weights for the benchmark, and here I'm referring to the benchmarks. So I'm refraining from referring our own weights because that tells you positioning. Uh, for Asia Small, if you take as a benchmark, it peaked at 34% from that 4 to 6% handle in September of 2024. Today it is down to 23, 24%. And that tells you how volatile the index weights could be because index weight is basically a reflection of the market performance. It's a backward looking indicator. If you look at from a large cap benchmark perspective, for EM, again, India's weight would have been in that 3 to 6% handle back when I joined. Uh, Today, again in September of 24, it peaked at roughly 20, 19 and a half. Today it is down to 11. But if you compare it to other markets that were at a similar weight back then, we have actually done not too bad, right? India's weight in the global portfolios has become meaningful and it has compounded, right? A lot of the other names that I talked about have actually disappeared, right? Russia is no longer an allocation because it's a closed market today. Uh, Turkey, nobody is invested in. So yeah, things have changed and things have changed for the better for India. So just from a numerical perspective, uh, if you come back to your first question around how should foreign money look at India and what really excites us about India, and there are enough and more talk we can talk about structural reforms, stable politics, geopolitics being good, and in India's favor. But the more important and the less talked about matter is India has been a very broad market, and it has become very broad in this 20 years that we have looked at India. If you were to go back to just 10 years, leave 20 years, just go back to 2016. Uh, Many sectors that are large sectors today were not existent, right? You think of healthcare, hotels, NBFCs, EMS, retail, were not there. To our count, roughly 18 to 20 new subsectors or partitions have come into the market, which were not there just 10 years back, right? If you look at it from a numerical perspective, uh, you know, India today has roughly 600 odd companies with more than $1 billion in market cap. If you were to compare that just 10 years back, that number was 200. And this 600 companies more than $1 billion in market cap would be one of the highest across EM because the market is not very concentrated at the top, right? If you look at Korea or a Taiwan, they are very concentrated at the top. The top two names in Korea would be closer to 50% in market cap. The top name in Taiwan, TSMC, would already be 40-50% of the market cap of the country, right? That's not the case in India. So especially for an active manager and a small and mid cap manager like myself, it gives you an opportunity to pick and choose. It gives you the depth and the breadth to express an active view. You can't express a very active view where 70% of your benchmark is one name, right? The only view you can express is how much underweight, overweight can I go TSMC. You can't really express any other meaningful. Whereas in a market like India, you can look at more options. Also, you have to remember that given the breadth of the market, apart from the depth is the 600 names that I talked about. But if you look at the breadth, right, it's not driven by one single theme. It's and so it's not right now. North Asia is largely driven by one theme today, AI. Uh, but if you look at the Indian market, there are multiple themes at play at any given point in time. And many of them are structural enough and fairly long term enough. So you can compound returns rather than taking a 6 month bet or a 3 month bet, which again, not many markets offer you that. Outside of the US, China, and EU as a common market, you don't have that option, right? You don't have option where you can invest in a hotel and a hospital and a diagnostic and a EMS and a food delivery company and all the options because the markets are just not large enough in many cases. How do you build a food delivery giant in a 20 million people market? It's very difficult, right? So India that ways now has built in that sense, a structural place in EM portfolios. Relative weights will depend on what's happening to other markets at various points in time, but it's not a portion that people can ignore. It has to be looked at and has to be looked at deeply because the partitions are many. Now I'll take a pause there. I can keep going on. This is my favorite topic, but
Yeah. Because you can provide a perspective which many of your peers cannot offer. Nearly looking at 2 decades Indian market exposure from a single platform. It spanned so many events, right? Spanning like the 2008 financial crisis, taper tantrum, demonetization, COVID, 2021 to 24 kind of retail bull run, and the recent one, which is 2024 to 25, the FII exit. So, in your view, what has actually structurally changed about Indian market over that period, and what hasn't? And I think you talked about few things like the participation of the retail money in India has increased. So that could be one of the structural change which may have happened. But if you can touch upon a few other ones which have happened and what hasn't changed over that period of time. The second part of my question, Vikas, would be you pointed out the weights of India in the EM or the EM small cap or the Asia small cap. How has been your positioning vis-a-vis that index and that weightage?
sure, sure, sure. Again, let me answer your second question first. It's a easier. Uh, so we have been fairly positive on India over long periods of time. Even when India's weight was this 4 to 6%, we were much higher for the funds that I manage, EM and Asian smaller companies. And that's structurally been so, and it has helped us over long horizons. There may be a year or two where India's relative overweight will drag us, but over long horizons, it has helped us. And we have had very many compounding ideas, right? Where we have compounded our returns 5, 10 times in a single company by being long-term investors. So that ways, India positioning has been healthy and high. Uh, but we do invest in other markets, right? I was looking at just to make this statement today. I'm invested in 20 markets today on a live basis on the EM fund, of which 5 are very large for us. Uh, 4 are what you think of, India, China, Taiwan, Korea. And we are also very large in a market like Vietnam, which is a off benchmark bet that we have taken. So that just gives you the uh, flavor of the our own positioning. But coming back to your first question, a lot of things have changed, and I think the thing is, when you are in the market on a daily basis, sometimes you don't appreciate those changes as much. But when you are within the market, also you don't appreciate those changes as much. But once you're outside, or if you look at it from a long frame, then you realize a lot of things have changed. Some we talked about. The depth has massively increased. The breadth has massively increased. The regulatory framework is actually quite good now. Especially the bankruptcy law changed a lot of things. I think that has brought a lot of good capital discipline in the market. Banks being allowed to run largely independently, including the public sector banks, again has been a very good positive step, and that has stayed. The other underappreciated fact is the inflation, right? We have been in an era of inflation staying between that 4 to 6 handle, right? Uh, Something we solved 6, 7 years ago, which has allowed for fairly stable interest rate regime. Uh, and most market participants have confidence in that. That's the more important change. If you take an example of Brazil today, it is still running a 13, 14, 15% interest rate economy because while the inflation has come down, people don't have confidence in inflation staying down. So it's not just the absolute level that matters, What also matters is whether the world at large and your own domestic population think that inflation will remain lower, right? It is the expectations that matter. So, in that sense, India has sorted out a lot of things and continues to sort out a lot of things. Some things that haven't changed is India is still fairly driven by controlling shareholders, which I think is a good thing. And as long as those controlling shareholders act in the best interest of all shareholders, which is what a lot of this higher DII participation has really enforced. Uh, that's a good feature, right? Versus other markets where the controlling shareholder ownership is much lower typically. So they are more divested or less skin in the game companies than here in India. So I think some things have remained the same, but a lot of things have changed, and that's changed for the better.
Compared to other EMs, Indian regulators have been quite proactive and they have managed the events over the past few years really well. Would you say that they are a reason for the resilience of the market, or a lighter touch would have done better?
Uh, Again, like all things, it has both sides, right? I think insofar as regulators, but on the whole, I think we will give higher marks. On the whole, they have done a good job, and I do think it is good to balance risk because last thing you want is a accident. Accidents really derail you for much longer, right? Uh, it's okay to slow down and but keep compounding, and this is true for countries as well as companies, right? Some of the examples that I took very early on, like Brazil, Turkey, South Africa, the problem is not that they don't see high periods of growth. They do see high periods of growth, but there have been big accidents in the middle, right? And when those accidents happen at a country level, that really pushes you back multiple years. Or geopolitical accidents, right? What is happening in Middle East, for instance, today, or some of our neighbors of India. Those accidents derail you by few years, right? So in that sense, it is very good to be a bit more cautious, which I think Indian regulators have been. Across the board, we haven't had any banking crisis or close to banking crisis for the last 10 years. Uh, that's a very good thing, right? Indian regulator is well regarded for that. As I talked about inflation, right? There is trust in the Indian central bank. Uh, so there is no, despite inflation moving here and there is a lot of trust in the central bank and their objectives. So by and large, and even the bankruptcy regulator that has come through or NCLT that has come through, they have been good actors in that sense. Uh, can we do things faster? Yes, I think despite all the steps we have taken, things still take some time to go through the system. So when we talk to say companies out of the hardware tech supply chain in Taiwan, Korea, and when you talk about them wanting to move to India, they do say that guys, it's easier for us to base out of Vietnam today. The speed of uh, you know approvals is much faster in some markets, but that's one small drag we will take. But otherwise, on the whole, I think it has moved in the positive direction, and even this step is moving in the positive direction to our.
Yeah. So India has done a lot of things correct, maybe on the regulatory side, as you correctly pointed out, Vikas. But in the current market scenario, the AI is the dominant theme, and India does not have any AI infra place, and India cannot suddenly have AI infra play without being invested in last 4 5 to 10 years or 15 20 years. So India is now termed as anti AI trade, and that's partly the reason a lot of FIIs have exited India and have moved their money to North Asia markets like Taiwan and Korea, like, as you talked about. So, what is your view of this anti AI trade in India, and the long term implications of AI, both direct and indirect in terms of consumption, employment, etc.?
Sure. So let's break the question into multiple parts. Uh, so the first part, if you think about it, yes, in the current stage of the rally, you know, India is not seen as an AI trade. I will not go as far as calling it an anti-AI trade, but I will say it is not seen as an AI trade today, because large part of the EM rally that has happened in this theme has been around picks and shovels, things that hyperscalers need today to build out the AI infrastructure, right? Whether it is memory, whether it is foundry, whether it is power equipment, whether it is transformers, or whether it is coolants, and the whole host of those things. And because we are challenging geometry at each stages now, obviously people who have been at it for the last 20, 30, 40, 50 years are better off in providing and taking advantage of that opportunity. And also the speed matters, right? Because because of a FOMO factor between the hyperscalers, uh, they don't have time on their hands. They are all rushing through. So obviously they are not looking at cost as a first pillar, but uh, time to market is the main pillar today. So yes, in this phase of the market rally, I think India has lagged behind, and there are reasons for it, as I explained. But that may not be the only stage of AI evolution. Yes, you build an AI infrastructure, but somebody needs to use it. Somebody needs to change businesses. Somebody needs to reimagine organizations and build a better work environment or a faster consumer experience. Uh, and that requires you to implement it, right, at scale. And when we talk to a lot of Indian companies and engage with them, in fact, many of them in our own portfolio as well, they are actually quite ahead and quite deep already into using AI to get better outcomes or massively reduce costs, right? Both the levers are true. What you required a human to do versus an engine, it can be fraction at times. But it also requires a fair bit of changes at your workflow level, uh, which is what I think Indians, which are younger in their journey, as a society as well as a business community, uh, are actually much more adaptable to it, right? So they are not really married to their kind of old practices. So I think India would be a meaningful AI beneficiary in the second leg when we come to using it, implementing it, and driving change at scale. Uh, and we have the right infrastructure at a national level for it, right? I think the jam trinity that we talk about, Jandan Aadhaar and mobile, that's a very good digital stack uh, on which to build these extra layers of AI, because that's a sovereign layer that you need before which you can. And not many countries have it. To be fair, right? We were talking the other day. Not many countries in South Asia have a very credible credit bureau, right? AI basically runs on data. If you don't have good, credible, trustworthy uh, data to back it, you can't really do anything. But if you have good data to back it, then it's very, very powerful. So in that sense, we are not that negative. Also, IT services has been seen as a impacted trade, which is a big part of Indian market, 11-12%. We do think, at least in the first wave of 5-6 years, IT companies would actually do well, uh, as more and more legacy companies or more and more companies need hand holding in their AI journeys. It's very easy to implement AI at an individual level. You just need to download a chat GPT, a perplexity, and start using it. But once you want to integrate into your organizational processes, there's a lot of hand holding required. And it's not something that the companies themselves are equipped to do. And that's where IT services companies come in. So I think we should be okay, but not in this leg, perhaps.
So can I say that it is not a case of sour grapes that we don't have exportable mangoes, which is basically Meta, Anthropic, Nvidia, Google, OpenAI, and SpaceX. We have the export variety of the fruit kind, but we will not be behind in the next leg where our population, with its mobile penetration and lots of data generating around, we will do much better. Can we you assume that to be a case of timing rather than a case of ability?
So I think I don't think so. I will get ahead and say that it's a done deal. But if we do things right, there is no reason why we should not be able to harness AI well in India. The right mixture is there, right? You still have to do it, right? Government has to take steps, companies have to take steps, people at large have to take steps, but the right ingredients are in place, right? As regards the hardware journey, I think we have started on that journey, but it's a long journey. It will not be, Rome was not built in a day. So India has just entered the tech supply chain. I think India has done well in the last 10-year journey, right? In the sense, most mobile phones were imported into India. Today, I think 90% plus are assembled in India. And we are also exporting a fair number of phones outside India. And we are keep on going down the value chain, getting into camera modules, casings, and others. And we will do that with other sectors, right? So in that sense, we are on the right path, but we need to keep at it. It's a decade, century-long journey. It's not a one-year thing, and you can't click it. And it's not Perplexity AI that will give you the answer 30 seconds later.
So Vikas, you correctly pointed out that India is a stock pickers market. It's the market for active management. Uh, where do you think the value is being created in the small and mid caps in India that foreign allocators systematically miss because they approach the market mostly through large cap and through a top down lens. So where are those opportunities in the small and mid cap space, which are bottom up opportunities, which a foreign allocator looking at top down would typically miss?
Sure. No. So again, uh, if you think about breadth, right? Uh, and let's zero in on a particular sector, and that will give you a sense. Uh, if you look at just healthcare, and it is not the largest sector in the economy, but it is a meaningful sector. But it has seen a lot of changes, right? Uh, if you look at most large companies there, some of them are the traditional pharma companies where India had an edge. India acted as a generic pharmacy to the world. And at least that story is understood enough by people because it's been around for a period of time. Uh, but if you look at the last 10 years, we have created a lot of other partitions in the market. We have hospitals, which were not there. You had one hospital listed 10 years back. You have diagnostics. You have the specialty hospitals. You have CDMO guys. You have guys supplying equipment. And go on, right? And I'm just taking a very small part of the market, which is healthcare. If you go into banking and finance, there are multiple partitions that have gotten created. Capital markets being one, brokerages being another, stock market infrastructure providers being another, right? So what a good manager or a good house or a good team would bring to the table is not looking at one mega trend, right? But you have to get into the weeds. If you're looking at hospitals, then you'll have to analyze all 15 of them and figure out which guys have the right to win. What are their managements doing? In which micro market can they succeed? Uh, so you need to, get your feet wet. You need to have boots on the ground. You need to do a deep job, right? You can't think that, okay, guys, I will put something on Bloomberg and an answer will come out and will allocate a weight. That's not going to happen. Uh, because please understand, the return differentials within a sector can be super large. Only today I was looking at one of the banks that we hold in the portfolio. It's a mid-sized bank, has done well. And I was comparing it to other mid-sized banks uh, on a 10-year basis, right? This thing has gone up 5x on a 10-year time frame. There are multiple peers of there who are flat. And I'm not talking about accidents who have actually collapsed as well, right? So the return differential within a subsector, I'm not comparing large banks to small banks or large bank to NBFCs. I'm talking just small mid-sized banks to other small mid-sized banks. The return differential within a sector frame is super large, and we can roll it across sectors, right? So stock picking is a very very important thing, right? And that basically requires a lot of work. It's there's no secret mantra to it. I think it's just a lot of lot of time spent. That is where I think those 300 meetings in a year come in handy. You're just churning through a lot of people and understanding what matters.
So there has been an improvement in the disclosure and transparency levels, especially in the small and mid cap because of regulatory reasons. The regulator has been very active in that. Uh, but we still continue to see a lot of promoters holding more than half the company. So there's a very concentrated shareholding with one or two persons or a group in each of these mid and small cap companies. This dynamic pulls in two directions, right? Because from an investor's perspective, does this impact the universe of companies that you are actually being able to look at today, apart from the breadth and depth that you've already talked about? Is there a
Sure,
difference in
sure,
this?
sure. No, I get it. One, 2 points there. One point is the disclosure norms in India are actually quite good. Uh, and versus 10 years back or 20 years back, they have dramatically improved. Uh, and especially for foreign capital, I would say it is also the easiest to access as well. In the sense, there is no language barrier as well, right? In the sense, everything is in English. Uh, in many other markets that we deal with, either the disclosure norms are not such that they will put everything on their website, or the calls will not be transcripted. So there are enough and more differences there in the disclosure norms. So operating in India becomes a lot easier today versus a lot of other markets that we operate in. And it has really improved over the last 10-15 years, both because of regulatory pressure, also because of you know domestic institutions becoming such a large part in the market, which has influenced and market cap becoming important for controlling shareholders. So there is a thirst for being rewarded by the market. So both things have pulled in that direction. To your second point around uh, concentrated shareholding, I think that's not necessarily a bad thing, right? I think companies are young enough. We are still a fairly young nation, young demography. So having people significant skin in the game is actually a good thing. And actually, we tend to prefer, if you talk about us personally, we tend to prefer companies where there is a deep skin in the game, because you also need people to make the right decision, the bold decisions, and have skin in the game, right? In fact, our chief complaint sometimes with markets like India is, despite having such high skin in the game, some entrepreneurs don't take very bold decisions, uh, which actually their shareholding allows them to, but they don't. And that's one thing that is holding us back to have big winners or big tech champions or big global dominating companies, right? Uh, so that's something to bear in mind. But high shareholding necessarily is not a bad.
Uh, because you correctly pointed out that most of the Indian founders or promoters, as we call them, focus on near-term returns and not long-term R&D investment, and that is kind of showing up in the near term right now. Uh, so there are so many nuances which I think you would know uh, nuances of the Indian market, the structural difference of Indian market and the other EMs, which I think we would want to understand from your perspective. How do you look at governance, the promoter founder dynamics, things which do not show up on the screens, gap between the earnings quality and the reported earning. Uh, there are those unglamorous mechanics of the market, like India or any other emerging market would be currency and valuation. So how do you look at those nuances of India in these things vis-a-vis other any emerging market or any other market with small cap?
Sure, sure. So let me first expand on the point that I was making earlier, because, and that's a key nuance, especially when you compare it to the North Asian markets today. Uh, the higher retail participation, higher domestic institutional participation, and higher market caps has brought in a lot of capital discipline in the market, right? Where nobody's, and bankruptcy law coming at the same time has brought a lot of capital discipline in the market. People are no longer doing empire building. There's no longer a case where you own a plantation company and then you also have planes and other things, things that you don't need within that business, right? So the empire building has stopped, and people are focusing on their core competencies, which is a good thing, and they are in general quite disciplined about the capex that they are putting in. But there is the other side to this whole argument, right? The other side to this whole argument is sometimes that they are not taking big enough bets, right? Or they are not spending enough on innovation, which is uncertain. There is certain innovation which is where you are saying, guys, uh, let's make this widget a bit better, right? That's let's add few more cents to my perfume, to my soap, that kind of an innovation. But then there is breakthrough innovation, right? Good examples would be where you have gone outside of your sector, or you have taken one skill set and become different, right? Let me take an example of a Korean company. One of the leading battery makers in Korea came out of a refinery. Uh, Samsung's first business was fish trading. Uh, so people have taken big bets to get out of the mold. I'm not saying Indians have not, some Indian groups have and taken very bold, large bets. Uh, but within the listed space, especially in the small and mid cap space, they have become a bit more conservative. So they have not taken multi-year bets. Also, I think one of the slightly worrying angle in the last few years that we have noticed is sometimes the market and market participants have shot down, core management's proposal to start a new strategic division or a new strategic, saying that guys, it is a bit too risky, right? Then we are pushing them to do it outside the firm, right? And this has happened in cases where the controlling shareholder does not have all the votes, right? These are typically new age companies where the controlling shareholder or the key founder actually has less than 10% or those kind of shares. So that's I would say a worrying trend from a long term perspective, right? Where uh, you don't want to stifle innovation, especially for a long term health of the market and the country, right? Which I think some markets like China and Korea have done a good job. So that's one big aspect. A lot of other aspects we have talked about. I think transparency is much better. The regulatory frame, insofar as minority protection is there, is also quite comparable to the best, and transparent enough. Uh, the earnings quality in general is quite decent. And disclosures are quite decent there. Can it get better? Yes, obviously there's always a scope to get better. But I think that has actually been on a positive trajectory. Uh, you know, Even our quarterly earnings now, you look at the first quarterly earnings after end of a quarter sometimes start flowing in on the 10th day or 11th day, right? Which is very, very fast. We were used to people filing in on the 45th day or 44th day earlier. Now it is 10, 11 days, and the early disclosure sometimes comes on the second day or the third day after the quarter is closing. That tells you that the quality has, uh, uh, people are not stealing in most cases. Again, people like you, me, who have been in the markets for 20 years, we have seen enough and more of that happen in the past. So I think that has people are not taking derivative bets. We have seen enough of that happen in the past, doing things that they didn't understand and taking big hits. Currency has moved so much in India, and we don't hear of any derivative hits. Right, 10 years back or 20 years back, there would have been a full list of companies which would have had earnings hit because of derivatives. So in that sense, I think on balance, it's quite positive.
On the currency and high relative valuation, Vikas, what's your thought process vis-a-vis other EMs and other markets? India typically trades at a relatively high multiples.
I think multiples are a function of three, four things. One is if you think of a DCF framework, it's a function of what is the period of growth advantage or competitive advantage that you are willing to give. Uh, if we are saying that India is coming from a very low income base and India goes into middle income and we keep as a nation growing at this 7% plus 4% inflation, 11, 12% handle of nominal for 20, 30 years. If you make those kind of assumptions and you are in businesses which can keep adapting and keep being relevant to capture that 11, 12% compounded, I think that allows for a fairly decently high multiple. Uh, Two, and that's a nuance which is not there in other markets, is India is still a capital locked market. most Indians outside of the top 0.1% really can't invest outside India. And we are in a wave where money is moving from FDs, gold into equities over the last 10, 15 years, right? And that is what is shown by the DII number, where they own 18, 19% of the market. Now that allows for a structurally higher multiple because there is eventually prices are determined by supply and demand, right? So the demand for stock, which is what is coming from the incremental equity ownership by Indians every year, right? Which is roughly 80, $90 billion annualized now versus the supply of paper. The supply of paper, yes, last 2 years was very bad because we had $50 billion in IPOs and OFS and other things, and people taking money out as foreign investors, and the Koreans getting listed in India and such. But on a normalized basis, that 80 billion, 90 billion annualized, if it were to stay and compound, provides a very steady base, which will allow for multiples to stay elevated. So I don't think so. It's right to compare it to markets which have different structures, or right to compare it to markets where a lot of earnings are coming from a single sector, a single trend, which could have very high cyclicalities. Uh, so in that sense, I think valuations are high, but they would remain reasonably high. I don't see even in the last 2 years of relatively weak performance, India valuations have not declined or collapsed. They have seen a time correction, and they have seen some amount of uh, uh, euphoria or exuberance has been curtailed, but it's not as if it has collapsed. And rightfully so. If the domestic institutions and domestic investors, it's a very healthy trend to see buying the dip from retail investors. So that tells you that the market has nuance.
In the case of, let's take a step back and see as to how will a foreign investor allocate to India today, given that it has a big market. There are almost 7,000 companies that are listed, but around 600, as you mentioned, are billion-dollar plus. So liquidity is a challenge and there's a long tail. What would you suggest a global allocator to look at from an if he has to put a chunk of money into India?
Uh, so I would say, one, I would disagree with you that liquidity is a challenge in general, unless you are putting billions and billions and billions. Liquidity is actually quite okay. Uh, and it has considerably improved over the last 10 years. But I think I will go back to my earlier point in the sense, if you are investing in India, you need to have nuance. And that nuance can only be done by being very grounded, right? In the sense, you need to either have feet feet on the ground, or you need to spend enough and more time, or choose a right partner. I don't think so. It's would be a great outcome if you were to uh, sit in some market outside India and look at Bloomberg and invest in a few companies, right? I don't think so that approach will work because there's no mega trend here, right? Uh, you know, Today when you are investing in a memory giant in two of those markets, you just need to have a view on a very specific variable, which you actually can gauge and build out of your office in London, New York, or Singapore. But to figure out whether somebody's Noida hospital is doing well, uh, because that's where the next big investment of that hospital is. uh, you need to have a good sense first where Noida is, and second, trying to figure out whether in that micro market that hospital or that hotel or that particular thing can work, right? Because there's no one India as well. So in that sense, you need right partners, whether they are internal to your team, uh, or they are external providers. So it would be actually quite faulty to take a view on India sitting completely outside, and not having.
Because in terms of given that your career has been so long, it's been almost 20 years. A lot of hypotheses which you had initially may have or may not have worked. Many of them would have changed over a period of time. Uh, so my question is essentially three parts. First part of the question, Vikas, is which or where have you changed mind significantly on a hypothesis regarding the Indian market? Second part of the question is what was one thing which you are glad that nobody recorded, where you had a hypothesis maybe 5 to 10 years back, and that hasn't played out that way, and you're just glad that nobody kind of recorded you there. And the third part of my question would be, what is one part which a foreign allocator is missing about India? What are those one or two things which they should think about India when they are looking to invest in India?
Sure, sure. I think things have changed my mind about, and I think let's take it at a more framework level. I think, and that's also part of growing up, I guess, as an investor as well. I think when I first joined, and it was a very value-oriented shop. Mobius and team was known to be very value-oriented, but I, when you are young, you tend to put more emphasis on growth, despite where you are sitting. Uh, so I used to think about growth first and risk later, in some sense, or and that tends to give you a slightly different set of outcomes, right? Uh, or we didn't emphasize risk management that significantly, right? And that's been a big learning, right, in a sense. So for instance, over the last 10-15 years, we have avoided any leverage issue. Most companies go bankrupt for only one reason, right? They are not able to pay their debts. That's always a leverage issue, right? That's the key reason companies die: leverage or fraud. So if you're able to avoid either of the two, then at least you never get a total loss. Uh, so that is the key learning for me, right? In the sense, you also always need to emphasize on companies and countries where risk management is paramount, because any derailment of risk management, either at a company, country, family, any level, right, leads to the compounding to stop, an accident to happen. So we always overemphasize over the last many years on companies and managements which recognize this very importantly. But we are not saying you should not take risk. We are in the risk-taking business, right? One of the best managements that I like, his favorite quote is, "We are in the business of taking risk and managing risk. We are not in the business of not taking risk," right? So, but you need to be cautious about what risk you're taking, in a sense. Is it rewarded? Is it rationalized? Uh, and is it the right kind of risk you want to take? So we have changed our mind that, guys, will not take financial leverage. That's not a risk we want to take. We will, the other collapse I talked about is frauds. We will not compromise on where we think that governance and fraud can be an issue, because you lose everything, right? That's one key learning, obviously, that has come with time, and that has held us in good stead over the last many years now. So that is one, and that's also something that foreigners miss sometimes, because that's not very, neither of those two things are very apparent from just the numbers. When this whole ESG wave came in and ESG became a very popular mantra, one of the companies in India which was the highest rated company was one of the companies where the CEO chairman is in jail today. Uh, uh, they used to be neighbors of us in our old office building in Mumbai. But anybody on the ground, anybody who had done his checks, knew that their governance had a lot of gaps. So it was common market knowledge. But as outside investors or somebody who relies on an ESG rating from a third party vendor, it was highest rated or one of the highest rated, right? So you have to look beyond the numbers, right? You can't. I mean, numbers are important. I live and run by it, but there are times that you have to look beyond the numbers, because if you don't do that, then you can get blindsided.
Yeah. So I'll repeat the second part of the question. I think what was one thing which no one recorded you?
Many trends you are ahead of time. So if you're ahead of, there's a little difference between being ahead of time and being wrong. If you're ahead of time by 5 years, it is as good as being wrong, right? And we run open-ended funds, so uh, we may like to say we are long-term investors, blah blah blah, but if you are ahead of time by 2, 3, 4, 5 years, boss, you're terribly wrong. And there are enough, and that's a key problem that you face as a regional investor, because you're seeing a trend in other markets and you have seen it fail, and you are saying that guys, sooner or later it will fail here as well. But that later could be 10 years out, right? Organized retail, it has not done well anywhere in the world lately, right? Because a lot of other markets are far ahead of India's journey on organized retail. But people have been able to build reasonably large businesses into organized retail. So one key learning I've had is also that you can't, just because you have a lens to look into 20 different markets which are at different stages of evolution, don't assume that they will automatically translate into another market. You can take some learnings from there, but then apply your sense and see whether it will apply to this market or not. And there's no one single size that fits all, right? So don't over compare as well. Compare and contrast is good, but don't over compare. If you over compare, then actually you tend to miss a lot of things, especially on that you are too early or too late. Yeah. So that's something I would not want to be recorded, because you tend to be, yeah, you can tend to be very early on many trades.
Good point.
So,
Uh,
where was Vikas wrong, but the outcome was favorable?
Sorry.
Where were you wrong, but the outcome was still favorable?
Okay, that's keeping me stumped. You get lucky, guys. I would be very dishonest if I said that luck is not a very major part of our successes, right? I think luck is very, very important. You may buy it for the wrong reasons, and things go up. Yeah, yeah, that happens all the time. There are, it happens more in the other markets today, where stocks can go up. There are enough stocks in my portfolio today which have gone up 3x in the last 3 months, and largely they are in Taiwan and Korea. And I would be dishonest if I said that, guys, 3 months back I knew that, right? Because they had some small widget that they produce which has suddenly gone into shortage, right? What happens is when you are throwing a very large demand injection into the system, where AI has suddenly built 30%, 40% extra demand into the component supply chain, and you want it fast, you want it yesterday, kind of problem, right? So suddenly you have new shortages that appear all of a sudden, right? uh, Things that you never thought they were critical link. If you go back to our professors classes on critical chain and goal, if you remember Rocky's classes, you never thought these are in the critical chain, but suddenly they become a shortage and they go up 3x 4x. And because there is very high operating leverage, uh, the stock prices just go through the roof, and suddenly you feel like a champion. And but you have not done any work on, you have just been lucky. So yeah, I think it's very important to realize when you're lucky and you hadn't done anything to deserve that luck. So yeah, being hired by boss when he hired me, it was sheer luck. Always grateful for that opportunity.
Yeah, I think luck is something which we all want and would always want on our side. So on that note, Vikas, thanks so much for your time. It's been a pleasure speaking with you, and your nuggets and your thought process is very helpful to us and to would be to our listeners and viewers. So thanks so much, Vikas, for your time.
It's been a joy. It's been a great conversation. Thanks for your good questions. Best of luck for your endeavors and the podcast. Let's stay in touch.
Thank you.
Thank you.